Welcome to everyone. I am Dr. S. Maheswari, Assistant Professor of Commerce CA, Vellalar College for Women. Now I am going to discuss about the working capital management. Before we see about the working capital, first we see about the capital. Simply it means the amount invested in business. Capital is the money used to build, run or grow a business. It can also refer to the net worth of a business. Capital most commonly refers to the money used by a business either to meet upcoming expenses or to invest in new assets and projects. Next, we see about the types of working capital. Types of capital. The capital is divided into two types, that is fixed capital and working capital. Fixed capital. Fixed capital is money that has been invested in fixed assets or the long-term assets that a company needs to start up and conduct business, such as property, plant, and equipment. Next, working capital. Working capital is the capital required for the day-to-day working of an enterprise. It is required for the purchase of raw material and for meeting day-to-day expenditure on salaries, wages, rents, advertising, etc. Definition. According to Subin, working capital is the amount of funds necessary to cover the cost of operating the enterprise. The working capital is the excess of current assets over current liabilities. Here is an example for working capital. There are some current assets, that is cash, accounts receivable, inventories. The total of current assets is 80 lakhs. Then current liabilities, accounts payable, short-term borrowings, accrued liabilities. The total of current liabilities is 40 lakhs. Here the working capital equal to current assets minus current liabilities, that is 80 lakhs minus 40 lakhs equal to 40 lakhs. Concept of working capital. Balance sheet concept and operating cycle and circular flow concept. First, balance sheet concept. The balance sheet concept is divided into two types, gross working capital and net working capital. Gross working capital refers to the total investment in current assets. The current assets employed in business give the idea about the utilization of working capital and the idea about the economic position of a company. Gross working capital concept is popular and acceptable concept in the field of finance. So we conclude that the total value of current assets is called the gross working capital. That is, gross working capital equal to total current assets. Then net working capital. Net working capital means current assets minus current liabilities. The difference between current assets and current liabilities is called the net working capital. If the net working capital is positive, business is able to meet its current liabilities. And if it is negative, the business is not able to meet the current liabilities. Net working capital equal to current assets minus current liabilities. Next, operating cycle concept. An operating cycle refers to the time it takes a company to buy goods, sell them, and receive cash from the sale of said goods. In other words, it's how long it takes a company to run its inventories into cash. The flow of operating cycle is as follows: obtaining raw material, producing goods, having finished goods, having receivables from making the sales, and finally we are obtaining the cash. That means cash received from payment from customers. Next, concepts of current assets. That is, there are some example for current assets. That is, cash and bank balance, stock and inventory, short-term loans, bills receivable, marketable securities, prepaid expenses, and other liquid assets. Then certain example for current liabilities. That is, bank overdraft, creditors, bills payable, short-term debt, advances and deposits received, outstanding expenses. Next, we see about the types of working capital. First, on the basis of concept. On the basis of concept, we divide into two types, gross working capital and net working capital. Gross working capital is the sum of total of all the current assets of a company. Net working capital is the difference between the current assets and the current liabilities of a company. Next, on the basis of time. Permanent or fixed working capital and temporary or variable working capital. Permanent working capital means the minimum level of current assets that a business needs to have in order to sustain its day-to-day operations. The temporary working capital is the money a business needs for a short period of time or for a specific initiative or time of year. It's also called variable working capital. Next, positive or negative working capital. The working capital position can be positive, then current assets exceed current liabilities. Then working capital can be a neutral working capital, that is current assets are equal to current liabilities. Then working capital can be negative working capital, that is current assets are less than current liabilities. Next we see about the need of working capital. First one, continuity in business operations. Working capital keeps the business operations going. It's needed to purchase raw materials and to pay the wages to workers and salaries to staff, and also to pay for recurring expenses like electricity and power bills, rent, etc. Next, dividend payment. Working capital is needed to pay a dividend to the shareholders. The payment of dividend takes place on a yearly or half yearly basis. Next, repayment of long-term loans. Working capital is also used to repay long-term loans and debentures. Next, increase credit worthiness. A company that pays its creditors on time has a positive reputation in the credit market. Such a goodwill helps the company to obtain raw materials on credit. It can also get loans and advances from the banks. Boost efficiency and productivity. The company that having adequate working capital provides better working conditions and welfare facilities to its workers. It also can maintain its machines in good condition and spend money for training and development of its workers. All such steps boost the efficiency and productivity of the company. Helps to fight competition. Working capital helps the company to fight its competitors. It can be used to advertise and for sales promotion. The company can also offer to give longer credit terms to the customers. Helps to withstand seasonal fluctuations. Working capital is required throughout the year, but sales may be seasonal in nature. If the sales are low, the money inflow is less. Therefore, liquid cash is required to pay wages to workers and to meet other expenses. So, it helps the company withstand seasonal fluctuations. Next, increase goodwill. The company that meets the needs of its working capital without any difficulty earns a good reputation in the labor and capital markets. This happens because the company pays wages and salaries to the employees and the suppliers of raw materials, etc. on time. Thus, it also helps increase the goodwill of the company. Thank you.